shoot. I think here we go.
Now that we finished all the
How you guys doing today? It's Ronan. We back in this thing. We are continuing the membership. So this is chapter 2, and it's gonna be time frame alignment and how do you
core
identify them.
concepts, it's time.
Let's go. Well,
Now that we finished all the core
market
concepts, it's
maker
time to move on
models.
to finding clean market maker models is under time frame alignment for market PDRA into market models. One, right, which is most preferred for you. Scalpers most of the time want to have a daily level,
yeah.
right? 1 hour structure and PDRAs on the market maker model. Go to the 5-minute buy or sell program and market maker model entries.
Now, you know,
same for a higher time frame on the monthly,
again.
right? We look at the daily structure, PDRAs for the market maker model, and then on the 1 hour, a buy or a sell program with market maker model entries. Time frame alignment for market maker models. So in a market maker buy model, there is almost always at least 2 stages of accumulation on the side of the curve. To another accumulation phase, right? So accumulation phase number 1, and then once we break now same for phase number 2 is high, confirming sell side of internal range with order pairing. So we've hit that external range liquidity. So what is the draw liquidity afterwards? Right here. We want to go to internal range, right? So external to if we look at the monthly chart, we look at the daily structure on a daily time going at makers, right? So chart here we get time frame price up higher, raise to internal, external range liquid, market fair value order, and again think about high resistance.
I'm not gonna lie, we can come back to this when we get more advanced. We trying to make some money. We trying to, you know what I'm saying? Like mitigation. So now that we went over
time frame alignment, blocks are the bullish order blocks on the buy side of the curve in a market maker sell model, and the bearish order blocks on the sell side of the curve in a market maker buy model. So where smart money bought in those bullish order blocks, right? We're gonna use that same order block on the sell side of the curve to offload their orders and mitigate their positions. Right, we've got a Australian dollar, US dollar daily chart, and we see a clear market maker sell model forming over here with this original consolidation, right? Accumulation phase number 1, accumulation phase number 2, and eventually taking out external range liquidity and making the highest high in this curve. So after we break structure, we know we are going to go into sell side of the curve, highly likely, because we took out external range again, right?
Start breaking structure,
we're expecting
boom,
this
it goes back
bearish
down.
PDRA. Now, where are the order blocks on the buy side of the curve?
Right here
those down close candles, right? Before my price moves up.
Also depends.
So we're gonna outline
on
those
the 3 candles of the fair value
bullish
gap.
order blocks to the sell side of the curve. So we want to extend the bullish order blocks from the buy side of the curve into the sell side of the curve, because that's where smart money bought before, and now they will use that to sell. We want to pair the mitigation block up with a new sell side PDRA. So as we just saw, a bearish fair value gap. We want the sell side PDRA to be inside the zone of the in the this bullish order block to the sell side of the curve, right? So we want to see our new sell side array form around this area where
this
we
consolidation
use this as a mitigation block.
I'm pretty
so we can
sure
see this fair value gap here, right?
It
this
would
plays
dip
lower
more
in breaking
down.
structure. So this is a premium array which we can use to sell off from. So outlining this bullish order block to the sell side of the curve, right? Now we can see where we can mitigate
this was a
orders.
bearish
so filling
closing.
up this fair value gap, not quite fully, but we tapped over the 50% level and then we reject.
Was for sure
so in the process, we're creating this bearish order block over here, right? And it's co-inlined with this bullish order block from the buy side of the curve. So now we have this layered, right? So now it's hype order block internal, and then sell side of. So we out smart money continue down, sell stops continue down for that last push and completing that mark.
This fair value gap closed bullish actually, and well, yeah. Would you Yeah, you would consider a fair value gap, but it did close bullish, taking in liquidity, and then this thing just ultimately dumped. So, hey,
market maker sell model down here. Right here. Took out these daily
so this
sell
is gonna
stops down
go
here. So
down.
we went from external start of a market maker buy smart money those positions down here, right? So you can send the price
Oh no, it
higher.
went up.
Again,
I'm
over
tripping.
here, bearish order block start of the gap right here. Took out these daily sell stops down here. So we
This
went
was
from external to internal. What does that
pretty
look
sure
like
that's
on the 1 hour chart?
bearish
So
candle. No,
with the start of a market maker buy model, we need an original consolidation, right? Over here, we've got that original consolidation. Accumulation phases down here until we reach that higher time frame key level. Smart money reversal down here. And now we're going to use those bearish order blocks on the buy side of the curve, right?
oh
To
no,
mitigate those
yeah.
positions.
That was
So
bullish.
we
I'm
have
tripping.
mitigation blocks for the
All
buy
right, so
side of the
this
curve. Is
fair
down
value gap
over here.
was
Time stops
bullish, and the
down here.
other one was
Canadian
bearish.
dollar daily chart. We filled up a month.
So when it's like this, oh wait, it's a monthly fair value gap fill. I'm tripping.
The fair value gap. What does that look like? Of a money refers bearish order blocks on the buy side of the curve, right? To block down here, extend it out in time.
Look at this fair value gap. Sorry, excuse me. Right here. So it closed. It closed bearish. No. It closed bullish. I'm tripping. So boom.
You can see a PD in that same, and then it will be higher.
All right. Okay.
Now let's move on to how to trade those market maker models.
Money maker models. Yep.
Daily array to a one where the original consolidation has formed, right? We've got on the lower end of this discount, we've got that original consolidation. Hourly structure, right? Moving up, accumulation phase number 1. Let me repeat that. So we've got this original consolidation down in discount over here. So we know this is going into buy side of the curve. Hourly structure on a market maker sell model. We've got that accumulation phase number 1, accumulation phase number 2, until we hit that daily premium array, right? Fractal, right? So on this, eventually liquidating this original consolidation, right? Let's go to a 1 hour time frame. Over here we got that run on stops on the buy side liquidity on the daily chart.
Oh, daily
right
high.
now we identify on the 1 hour where is the original consolidation. Right down here we've got this nice original consolidation. Price expands up higher, right, like fair values, right? We've got that new PD array that re-delivered 1 hour respected. So sell side of the curve, right, to the upside, right? Buy model forming. Dive into a 1 minute after high. So we have our premium.
So y'all see all this retracement, boom, consolidation, boom, goes back up, goes straight back down. Go straight back down. Basically, don't go against the trend. Like you see the trend, don't go against it.
We can dive into even a lower time frame. Reversal, respecting this little, we're leaving out these engineered liquidity up here, which is a failure swing and equal highs.
Not a fair value gap
for buy side of the curve.
This,
market structure shift over here.
Nah.
Also one down here.
I mean, you can.
But this is a significant break in structure. So where do we get PD array on this? We create another fair value gap. This displacement up here. Co-inlined with that mitigation block, making it high probable it will hold. Part is in the kill eye inside this fair value. So over here that makes sense to continue down.
Really just search out for them fair value gaps. Now we're looking at the silver bullet entry model.
The last lesson of the market. What is the silver bullet? It's advanced market structure, and we'll show you in some charts later how that looks like. But first, what is a silver bullet? The silver bullet is the second stage of accumulation in a market maker buy model, or it is the second stage of distribution in a market maker sell model. And the hardest part for most traders is being able to identify the stages in the moment as price is printing live. So how do you know that this next leg is the silver bullet, and why is the previous high or low the low risk sell or the low risk buy in that market maker model, or as we call it, stage 1? We do not need to know the low risk buy or the low risk sell in the moment as price is printing. We know when the silver bullet is going to be forming by understanding intermediate term highs and intermediate term lows. This is all about market structure. An intermediate term high is a high that has a short term high to the left of it and to the right of it. And an intermediate term low is a low that has a short term low to the left of it and a short term low to the right of it. So the intermediate term high or the intermediate term low is where you place your stop loss. That's the high or low in the structure you don't want to see get violated. There are two ways to trade the silver bullet. Trading after a confirmed intermediate term high or intermediate term low has formed. So it has a short term high or low to the left and a short term high or low to the right of it. Or we're going to anticipate that intermediate term high forming and trading that short term high or short term low that will be forming next to it.
Short-term high, short-term
So here
low.
we got a crude depiction of how a market maker model looks like. We got
Smart
that
money
again original
reversal,
consolidation
boom, low
up here,
risk
right?
buy
And then
in.
hitting a key
You see
level
this
once
takes
again
out
where the
a
smart money
higher
reversal
low,
should
so that's a
occur.
great sign
Now
of
breaking
bullish, and
structure
then
up here,
boom, boom,
and then the
boom.
first area over here,
Accumulation
that is the low
phase,
risk
then
buy in
boom.
a market maker buy model. We're not looking for this. We're looking for that second stage of accumulation in this market maker buy model. And then we form that of the distribution or short-term lows after that smart money reversal. And remember, once again, so this could be a bearish order block, right? So our entry is in anticipation of that short-term high forming to the right of it, right? Looking at it from a different perspective, option number 2. Again, we drop lower, breaking structure after that smart money reversal, right? Short-term high to the left, long-term
beating
high,
that
and then another
lower
short-term high
low.
to the right of it. Now we need to wait for that intermediate term high to be formed. We wait for a rate. Here another schematic and then that mitigation. Every time, right? External range liquidity into internal range liquidity. We rate this external range liquidity alt daily algorithm only. We look for that silver bullet setup. So of this range, right? Creating that low risk sell, forming another distribution phase or breaker block into internal, right? Anticipate a short-term high. Immediately the second stage of a bullish order block, supporting price, pushing up, breaking market structure. This is called a low risk buy, right? For smart money. But for us it's not a low risk buy because it's actually a little bit higher risk for us because we don't know if market structure shift will happen.
So you
That's why
want
we
to do
wait
it
for that
after market structure breaks, and then boom.
Whole silver bullet setup is a very
Run
solid
this,
entry model.
run it right here.
We anticipate this
fair value gap
low
right here,
being formed, being the intermediate term low.
Is that a fair
Why?
value gap?
Because we take out
That
this short term
is
low,
a fair
right?
value gap.
And
Boom.
then creating another short term buy side of the curve into buy side of the curve instead of anticipating an entry here. If
So
you're
as you see, you know, don't want to make this too long of a video. Basically just we're basically just, you know what I'm saying, we're knocking down lower lows, boom. We're knocking down lower lows, bearish, you know what I'm saying, doing them sell orders at a great time. Knocking down higher highs on everything, bullish, you know, we're getting it in. So want to end you guys on that note, and hey, stay locked in. Tomorrow we're gonna drop another video, and then Monday we're gonna go ahead and buy those 2 top step funded accounts and run it up, man. Boom.